You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' music means it's time once again. It's either Monday or it's Thursday. This time it's Thursday. It means it's time for the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Pleased to be joining you here on this epic action-packed. A little bit of stuff actually happened this week, which is always nice to have on the old docket. Sometimes in the lazy start to the year, sometimes a little bit quieter. But this week, some things actually popping off, which is always nice. And of course, if you're new to the program, first off, welcome. Secondly, of course, all the archives I just checked for over 600 episodes now. Crazy cakes! Who thought we got that far? We seemed like we just celebrated 500 not that long ago with everybody here in the studio and the Viceroy, everybody eating pizza. That was fun. I think I get the Viceroy back on again, by the way. It's always fun to check in with him, see what he's up to these days. But yeah, 600 plus episodes, easiest place to find them, theoptionsinsider.com. Or, of course, your iTunes, your TuneIns, your Stitchers, your iHeartRadios, all that fun stuff. Also available via our mobile app, available for all of the major platforms. And if that's not enough for you, you can also just join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, Mixlr. Click on that link we put out there all the time, and you too can join the party. See how the show is truly made behind the scenes. I warn you, it's an ugly picture with Andrew, but you'll get used to it after a while. All right, speaking of Mr. Andrew, he's the team joining me on the old program today. Usual cast of characters. Let's start off with the king of umbrage himself, the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir. And how is your umbrage meter for today?
Well, for somebody that was so cheery and chirpy and busy and like doing stuff, you just went and you slammed the Rock Lobster right away. All I can say is I had to take umbrage to that. What the heck is that?
It is.
I was having a grand old time today until that.
It's my job to bring you down to earth a little bit, because when you're too chippy and cheery, we don't recognize you. We don't know who this guy is, so we got to bring you back into show mode.
I think Tusa and I should take the show over again and kick you back off to Florida, so that way we can talk about you when you're not here. That works really good.
Someone's got to go out and shake the cup and keep this crazy train rolling. Speaking of the crazy train that rolls on, our next stop a little bit closer to home, St. Charles, Illinois. We are joined by the pickle provocateur himself, Uncle Mike Tosaw. I like that title. Uncle Mike Tosaw from RCM Wealth Advisor / RCM Alts / RCM Futures / RCM MISC. They do it all. Uncle Mike, welcome back to the program to you as well.
Well, good to be here, but I got to claim umbrage now because you said that Andrew was the king of umbrage. How come he gets to be king? And top of that, yes, I do live in the former pickle capital of the world, now the water garden capital of the world, but I really don't like pickles. So I'm going to claim umbrage too. Let's take this thing over, Mark.
Well, if you want me to take it over, that's easy. I can just hit that button right now like I just did, and bam, show's taken over while we keep on rolling right on into the trading block. It's good to be in the big chair. It's fun.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. While they're going on about their umbrage and so on and so forth, we'll go on with what was lighting it up in today's market activity. Today, net movement on the day was a little bit quiet. Most of the major indices finishing the day off about 0.25% or so. They had a bit of a range, though, about a 16-point range out there in the S&P, so it wasn't perhaps net as quiet as the indices may give you the impression at the end of the day. VIX cash ticking up north of that 13 handle now, which is interesting. This has kind of been a point of discussion pretty much all week, of course. Earlier this week, we saw one of our first over 1% sell-offs in quite some time. In fact, I have the stat here somewhere. I'll dig it up while we're talking of exactly how long that streak was, but it was a substantial period without a 1% sell-off in the S&P. I believe it was the longest period since the mid-60s, 100 some odd days. Let me see if I can get the exact. Here we go. Yeah, so it was about 100, looks like about 110 or so days, which is the longest period since about 1965 or so, right in that range, somewhere between 664 and 660. The scale on this graph, a little hard to tell. But still, somewhere in that range where that was about almost 160 days. But still a very long, quiet period. And 1+% sell-off to the downside. And, of course, VIX cash kind of shrugging to the upside. A lot of people were writing in about that. We'll get to that. But first, let's start with what was catching your eye in today's activity. If you want to go back a few days, talk about that 1% sell-off and what we saw as well, I may allow it. So let's start with the Rock Lobster because he's the source of all umbrage on this show. What caught your eye in today's activity, and also have your pit chatters been chatting it up about the movements we've seen so far this week, and perhaps the lack of response in certain products?
You know what? I just want to say that I am the king of umbrage on the show. He just said it twice, buddy. You are out. You are just in St. Charles, tilting at fountains. That's all I got to say. Anyway. You know what, our pit chatters, we were kind of set up for some kind of more boisterous movement here. I think the market move of this week has been it's like a mini referendum on the GOP being able to deliver anything. And once again, the politicians disappointed everybody. Couldn't get the votes together, couldn't have a vote. Press conference, vote tomorrow, maybe later. Kicking the can, can't fix healthcare, talk the big game, and now they're doing nothing. So I think part of that, just like we've seen, like fiscal cliff and the sequester, which was supposed to be awful, and then probably had the S&P 500 was up 30% that year, something like that, right on the heels of that. We had all these, and remember in 2011 when Congress couldn't pass a budget and Standard & Poor's downgraded them and we crashed and all that kind of stuff. So I think the government trying to be able to do something in general, if they could kind of some sort of compromise and make it work, generally we rally because that adds to, so anytime the market has forward visibility, it goes up. After watching the market for 25 years, that's what it does. When there's forward visibility, it goes up. When Congress can kind of agree and do stuff, whatever, even if they fight, but come up with some sort of solution, I think that takes a level of unknowns, and equities like it, and vol goes down. That's pretty much what happens. Until that time, though, things get bid up. Like the vol has gotten bid up, VIX is 13. We did have that 1% move this week. I think that was all about, the whole agenda maybe being stalled, and all of a sudden there won't be much financial reform, and there won't be any tax reform, and everybody, freaks out and sells. I think that's what this week was about. The fact that we didn't get any more of a bump in volatility, I think there's still, let's just call there's hope against hope that something might happen. I don't know if it does or not, but I think that was the driver of the action this week. There wasn't any really other news besides the usual litany of North Korea's saber rattling and there's more awful terrorist attacks and the same old crappy news that's usually around. But I think this is this is a mini referendum on trying to get something done. If they do, we probably will retrace a lot of what we lost this week. If they kind of fail and then just really kind of are ambivalent about a timeline, then I think part of this this early Trump euphoria wears off and we sell off a little bit. So that's how we've been kind of trading it. We dumped We this morning when we had that rally, we dumped some long deltas and we also dumped some vol deltas. So let's see what happens after this. It didn't give us. It gave us a very underwhelming bang. Let's put it that way. I was kind of looking for a little bit more of a vol move, but it looks like we have at least a day to wait before we see that, and that's how I see that.
Yeah, it has been, shall we say, I think underwhelming is a good term for it. We had some people hitting us up this week saying, what's up? What's going on? But this is something we've been talking about a lot on Vol Views as well. We'll probably get into it more tomorrow. There has been kind of this weird scenario setting up where the futures are already pricing something in a little bit farther, but the realized vol was completely anemic the last couple of days notwithstanding. And so we had this weird scenario where we're kind of caught between two extremes, and I think we saw that playing out this week out there in VIX land. But a lot of other things popping off aside from VIX land. Uncle Mike, you watch a lot of those things. You watch, of course, well, there's your XLE 35 strike puts, your 70 puts in Apple, and a few other things probably catching your eye. So what's been catching your eye out there today, sir, and this week?
Well, a couple things. First off, you know how when your kid cries and sometimes you say to your kid, you better quit your crying or I'm going to give you something to cry about. Well, Andrew better quit his umbrage over there in Maine, saying he's the king of umbrage, or I'm going to give him something to have umbrage about. I think I have a mind to go out there. I think I'm going to drain the lubricant chainsaw oil out of his chainsaw, and then maybe after that I'll do something to, I don't know what yet, but maybe just to do something, just maybe put like a hole in his beer cooler in his boat, so when the water drains out that much quicker, he has warm beer. That's how upset I am about him being the king of umbrage. But anyway, with that being said, a couple of things that are going on that we're watching today. Overall during the week, we've had a little bit more of a rally in the precious metals. I think that, and we've pulled back a little bit more on the slippery stuff in oil. So I think that's a little bit newsworthy. The main thing that's happening right now is the healthcare bill. And the big debate throughout the news media today was, if the healthcare bill doesn't pass, are we going to come down with a 1,000-point drop in the Dow? That's what everybody's talking about. And whether or not that happens, who knows? But what I do think we really need to focus on right now is the fact that we are up still very significantly over the course of the last or year to date. And also, with that being said, the fact that we are up, we also need to have an understanding that when you come up this quickly, let's not lose perspective, folks. We've had a very fast rally. Pullbacks are a normal, healthy thing. And just because we're debating over what the catalyst might be for the pullback, whether it might be the healthcare bill not going through, or whether it's North Korea doing something, most likely what the catalyst would be, in my opinion, I think everyone would agree, would be the healthcare bill not going through. But we do have a very healthy market. Now, one thing about Trump not getting the healthcare bill through, if he doesn't get it through, and it still might be. I know they have the delay going on right now. I know there was a big deal when they didn't do their news conference today, but let's say it doesn't go through. And if that's the case, does that mean that all of his other things aren't going to go through? No, I don't think so. You show me a Republican that doesn't vote yay on a tax cut, and I'll show you likely a Republican that's not going to be in office his next term. One of his big things is also that he wants to have tax cuts. And so if the healthcare bill doesn't go through, but he still gets his tax cut through, then that's something that could also bode well for the market. Deregulation. Once again, healthcare, if you guys remember correctly, was a very hot button issue even back in 2011, 2012, when a lot of this came around the first time. And so with this, or I'm sorry, in 08, 09, I'm sorry, or 09, 2010, when we were having this debate before, Obama barely got the Affordable Care Act passed. If I remember correctly, no Republican voted for it, and there was a lot of debate within the Democratic Party about it. This is a very hot button issue. When he gets to some of the other things that he promised, I don't think those are going to be so hot button. I mean, he'll have debate, and it's not going to go through with unanimous votes by any means, but he picked the hardest thing to do first. Now, whether or not that was wise on his part, well, I'm not a politician by any means, but what I am saying, and the whole point at where I'm going with this, is that just because one thing doesn't pass doesn't mean other things aren't going to pass. And so I personally don't think we're going to have a big drop in the marketplace if this doesn't pass. But if we do, I kind of have a plan for that, which I'll talk about in the strategy block today. And that's my take on the markets today. Andrew, you better watch your chainsaw lube oil.
I'm hiding it right now. I'm running into the garage and I want to hide it.
I would.
I'm worried.
Got some umbrage cooking. Well, not really coastal, because it's not on a coast. I should count the lake as a coast. So let's say partial coastal umbrage face-off over here on the old option block. Moving on to some other things. Actually, even though the season has kind of wound down, we touched on these guys earlier in the week on our Monday show. So let's revisit them because they are popping off right now. That is all things GameStop. Remember last time we talked about how this store, which has relied, quite frankly, on making their own kind of third market in used video games, and has done quite well. We used to joke about when we were on the floor, if I can be the only market maker out here, I can make the spread as wide as I want. And that's what GameStop effectively was for the past decade or two. So it was a good run for them. That run may be coming to an end. We have earnings popping off after the bell here, of course, GameStop. Ticker symbol GAME, GME. Closing today just shy at $24, $23.96. They were pricing in about $1.80. That's about 7.5%. So not a bad move. They were pricing in, and it seems like the market, all this dire talk about what's going to happen with the future of digital distribution. Well, that seems to be coming to bear on them a little bit too. GameStop selling off a little over $2 right now, about $2.12 or so, which is a little over 8, almost 9%. So again, one of our last names on the docket is actually one of the few that, at least in the first blush, seems to be exceeding its straddle. So who knows? I haven't had a chance to dissect these results. Clearly, the market not liking what it's hearing. So we'll see. Maybe this is the dreaded long arm of digital distribution finally coming in on their brick and mortar. But this is like a story. I was reading a story again this morning. 2017 is the death of retail. One by one, big retailers kind of getting the axe or having a hard time. I don't know, Mr. Rock Lobster, was this one catching the eye? Any of the hardcores over there in the pit chat? And what do you think about your old favorite here, GameStop, apparently outperforming their straddle to the downside?
Yeah, we looked at this a little bit. There was some action in it, but it never got the cockles of everybody's heart moving today, I have to say. It's I think it's one of those I know that the kids like it, but it still feels like a little Radio Shacky to me, but maybe I'm wrong about that. It does pay a pretty big dividend though. I'll say that much.
Well, it was nice. They were that analogy is not far from the mark. They were the sole market maker for a long time in the used game market. We saw other players try to get in on that. I think Walmart and Best Buy saying, "Hey, we can do that too," and try to carp that spread a little bit. But for a long time, they were printing money. Some would argue maybe even more money on the actual games being made than the publishers and developers themselves. I know that was a big point of contention for a long time in that space. When you have a third party coming in and effectively just taking up all of the oxygen in the room, it's a little interesting. But still, it's an interesting one. We'll see how these numbers play out as we keep on rolling with the show right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky music means it's time for the funky portion of the show. The weird, the head-scratching, the wild, the wondrous. Let's hope the correct portion of the show today. Yes, it's time for the Odd Block. And let's kick things off in a realm we've talked about once or twice in the past. We're going to talk about it again today. This is good old Fireeye, ticker symbol FEYE, FEYE, closing today 12.19, up about 70 cents, or right about 6% on the day. That's the name that does. About 13,000 contracts, so they do a fair amount of volume today, doing a little bit more than that, doing nearly 40,000, about 38,000 and change, almost 4.5 to 1. Calls over puts, and yes, that's where our attention was drawn, listeners. And let's kick things off here. Looking at this spread, it was the March-May 15 call spread going up. Looks like it started the day about, actually not 15, it was 13.15. Going up, looks like about 1,500 by 1,000 times. As the day went on, looks like it did about 2x that, about 3,000 on the March, and about, let's get down here to the May. Of course, we're scrolling slow. It's about 1,500 or close on the old May leg. So yeah, it was the March 24 13s going up. Looks like paper buying the March, doing that a total, we said, of about 3,000 times versus about, like I said, about 1,200 total of the May selling. This appears to be a little bit of the old up and out, closing out, again, open interest on this strike of about 3,600. So it looks like our friend perhaps closing out a short that's getting a little bit close to the fire. Again, Fireeye popping today. Maybe he got a little bit spooked. 13 handle, getting close. We're at the 12.20 or so right now. Decided to close that out and perhaps also come back. He did it for a few cents, so not a bad do there. And then turning around saying, you know what, give myself a little bit more room to run on the upside, doing that at the 15 strike, doing it for less size too, which I think is interesting. All of this, though, does smack of someone who's sitting on some long underlying here, wants to keep the yield party going, but also doesn't want to get his stock called away. So he's not coming back to play on the 13 strike this time. Maybe an interesting sign for you Fireeye bulls out there. Our friend here perhaps thinking there's a little bit more room to run on the upside in the near term. Looking back on this one over the past year or so, again, like we mentioned before, it has a bit of a tight range, been about 18 or so on the upside, and on the downside, it got down to in the 10 handle, so about 10 half. So it's been about 10 half or so to roughly 18, with a lion's share spent somewhere in the middle of that range. Our friend here thinking we could test some of the upper bounds of that again, and he's drawn his line, at least in the near term, on the 15 handle. Mr. Rock Lobster, let's kick it off here. We're thinking of our friend closing out, but then coming back to play, but doing it for less size and at a higher strike in Fireeye.
Did you find that a little bit interesting for the roll? They're going up to the 15s. It seems like it just feels like a call spread, a short call roller. They don't want to sell as many calls this time, though. Right? Maybe it was something that worked and they kind of rode Fireeye down, and now that it's kind of bouncing back up, they're a little iffy about the concept. Not quite as sure, let's say. What do you think about that? That's kind of how I saw that.
Yeah, we don't see that very often.
There's been a lot of call buying paper in here in general, so I thought it was instructive that the trader, they're looking at it, go, I'm going to buy back these calls for a nickel now. and just and move. So usually this seems to be it's kind of bullish because the trader thinks that the stock's going up and they want to get a little bit more juice out of their calls. So, but at least at the beginning, that's usually how this trade appears. Doesn't mean they're right or not, but they're not interested in leaving those 13 calls open anymore. That's what I kind of got on that one.
Yeah, they do have it's a whiff of, I don't know if I would say panic, but a little bit of perhaps today's move spooking them a little bit, saying, let's get the heck off this 13 strike. And then I'm not too comfortable reestablishing all the same size I just did. So let's go half. Let's go halvesies and see how that works out this time. You're right. We don't usually see that. Usually, particularly if a trade worked out well, and it seems like this one did, we see them coming in for the same or perhaps more size on the longer leg. So when it works out their way and they come in kind of tentatively on the other side, it's kind of an interesting sign in and of itself. Again, there's a lot of interesting things to read in the tea leaves on the unusual activity, listeners. This is just one of them. Let's move on now to another name we've talked about. This is like a frequent offender block today. We got Vale. This is Vale SA. They are an ADR, easy for me to say. Of course, a metals and mining company, producer of iron ore and nickel. If you are not familiar with them, this is the name that closed. Like I said, ticker symbol Vale, VALE, closing about $9.32, off about 20 cents or a little over 2% on the day. It's a name that actually rocks and rolls pretty well, about 45,000 contracts a day. Today, doing a little bit less than that, interestingly enough, so it wasn't a net spike in activity that caught our eye, more a particular trade. About 4-1 today, calls over puts. And that's once again where our attention was drawn. A little bit farther out, not playing in the March weeklies or even in the Aprils. No, we're going all the way out to May. And instead of rolling out, we're rolling up this time. At least it looks like it. It looks like the 10-12 call spread going up about 7,000 times doing it. Looks like paper buying that bad boy net for 33 cents. There about 7,200 times total on the 10s and about 7,000, a little bit of change on the 12. So about 7,000 total going up on the day. Important open interest on the 10s, about 7,600. So that's covered there, and only about 5,900 on the 12. So it looks like someone perhaps could be straight up rolling, could be straight up establishing a new vertical spread. But if I had to wager here, I probably would lean on the rolling from the 10s up to the 12s, which would be a similar scenario to our friend back in Fireeye, but he's not going out any farther. He's just going up some strikes, and he's keeping his size the same. Maybe, again, today deciding, these things are coming off a little bit today. I'll take this opportunity to buy these bad boys back a little bit cheaper and then come in again on the 12s. Looking back at the year that's been so far out here, in Vale, this thing has had a range from down into the forehand, actually three. It hit 3 and about 370 or so back earlier, about a year ago, and then hit as high as flirting with 12. Didn't quite get there, but it flirted with it. So it's had quite the range over the past year. We're kind of up in the upper quadrant of it right now. 9:30, like I said, closing today. So our friend here taking an opportunity to say, you know what? Let's draw that line. Let's readjust. I think maybe we could hit the 10 strike. So let's readjust. Again, perhaps not wanting to get called away, another long underlying holder, and then coming back on the 12 strike. Interesting one, Mr. Rock Lobster again. Not quite for the time angle this time, but he kept it in the same month, which is interesting in and of itself. Usually when we see these, you see someone trying to buy themselves a little bit of time at the same time to do. He didn't go that route. Instead, he kept it all vertical, kept it all in May, and decided just to roll up. So are you agreeing with me? Are you feeling roll, or are you more feeling that this is additive? How you want to go?
Well, there's so much stuff going on in Brazil. I want to check the open interest tomorrow. I have to say I'm going to defer because of it's such a difference if they're just rolling. If they're buying to roll up, it still could be a little bullish, right? Because they're trying to roll up, getting a little too scary close to the strike, or it's not very expensive for that call spread either. So there's a lot going on in Brazil because I think they're trying to throw everybody in jail. I'm not quite sure, but so I have to check. But I'm on the fence. I have to say I am firmly sitting on the fence on this one, which is pretty lame for a radio podcast.
That is pretty weak. There's no checking. There's no checking on the odd block. We go with our gut. We have 6 seconds to analyze this stuff. We go with our gusto and we move on to the next. So there's no looking back at open interest.
All right. Then I got to say it's smelling more rolly to me, but a little more rolly.
There's no level-headed the day after analysis. This is live radio, sir. We got to go big or go home. And I guess you decided to take your ball and go home on that one. Don't worry, I'll go big for both of us. I'll say roll as well. I won't be so scared as the Rock Lobster. Hashtag scared. All right, let's move on to our final name. This is, what we got here? We got GGP Inc. Ticker symbol, appropriately enough, GGP. Mr. Rock Lobster knows that I like those names. Closing today, about 23 even, up about 1.5% on the day. If you're not familiar with this one, this is General Growth Properties. They're actually right across the river. Right here from our studios. I could see them from our studio window if I was at the other side of the studio. I'm deep in the bowels where we record the shows, but if I was off at the pretty side by the river here in Chicago, I could see them right across the street. And I think that company actually, they're going to be knocking that building down. So we shall see. But yeah, I'll see them for at least for a little while across our studio window here. And like we said, this is a name that does decent paper, about 3,500 contracts a day, which for the odd block, not bad. Again, this is a real estate investment trust, a REIT, so usually kind of sleepy paper, but not 3,500, not bad. Today doing about 14, nearly 15,000, about 18 to 1 calls over puts, so of course our eyes were drawn immediately to the puts. No, it was drawn to some interesting longer-term paper, and you gotta love the strikes out here, Mr. Rock Lobster. Any of these kind of post-split or corporate action-adjusted names, the strikes are always funky. And this time our strikes are the 26. It's all over the place. It's 2 handles and it's 5. We got the 2674. Yes, 26.74 listener strikes out here in Jan of 2018. Quite a dearth of strikes out there. You got 2674, then on the downside, the next strike is 2474, then it's 22 even, then it's 2174. On the upside, we got 2974, then 3174, and all the way 0.74 is all the way up to 4674. So you want your strike selections, maybe long-term in GGP, not the place to be. But we did see some interesting players out there nonetheless today, in particular in the 2674 calls, where we saw 10,000. Yes, a good mega block, one block going up over there on the ISE for 78 cents. This was a funky one for a lot of reasons. Long term, so kind of interesting there. Also, the execution was pretty much right around mid-market, so don't know if it's buying, but again, we can intuit a little bit. It was a little bit above the midpoint there, so you could maybe intuit. That doesn't really mean anything, but it sometimes can be an indicator. That combined with a slight pop in the old IV on that strike has us leaning buy. But again, I have a feeling Mr. Rock Lobster going to sit on the fence and say, I'm going to wait until tomorrow, like Eeyore. I don't feel like chiming in. But still, yeah, about 10,000 or so, probably buy. Open interest pretty much non-existent on this strike, only about 1,500 contracts. Although it is worth noting, there is about 10,000 open on the 24.74 strike, so effectively one strike below it. Maybe someone legging into a vertical, that'd be kind of weird as well. Why you do that now, legging into a piecemeal wouldn't make much sense. Maybe legging into a stupid as well. Maybe Uncle Mike has something to do with this, we shall see. But still, it's funky for all sorts of reasons. Funky for the strike, funky for the size, funky for the execution, funky for the time choice. A lot of interesting reasons why this paper is hashtag funky. And looking here at the year that's been so far out here in good old GGP, it's kind of been a little topsy-turvy. Hit a high of about 31 back in late summer, about late July, early August of last year, and kind of been on a long, slow decline ever since, hitting it's close to its lows right now. Got about 22.5 or 22.30 was about the low out here, but 23, not that far above it right now. So we're hovering at the very low end of that 52-week range. And at least, if this is as it appears to be on the surface, Mr. Rock Lobster, our friend here, thinking there is some room to run, in particular, north of the 26.74 strike, sir.
You know what the best thing about this stock is? The symbol's GGP, and the name is GGP.
That is the best thing about this stock, yes. And the strikes. The weirdest strike. Okay, I'm going to buy 10,000 of the weirdest whack job strike I could find, just because I've got nothing better to do. However, it does smell pretty bullish. I don't even know if I'm going to sit on the fence on this. I'm gonna get on Eeyore, and I'm going to kick him and get him moving, because I think somebody is go on this. They're trying to scoop this GGP at the bottom. Like there's the giant retail, what is this, mall operator or something like that. Like it's all going to happen again. So it's feeling, with the volatility at about 0 right now anyway, I'd have to say this is probably one of the better types of call buys that you would want. If one were so bullishly inclined. If one were indeed so bullishly inclined and so outlandish as to trade a stock with the 26.74 strikes. I love those funky strikes. Check it out for yourself. It's an interesting one. Even on Rock Lobster, getting off the fence on this one, so it's an interesting one. Why would you? What's your thoughts? Why would you come out and buy such long-term funky paper in GGP? Are you too feeling the bullish love as it appears to be in this name? Are you feeling something else? You think this guy's crazy? Let us know. Love to hear from you guys. Meanwhile, it's time for you guys to take a back seat, though, because Uncle Mike's turn to talk. It's Thursday. That means it's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It's Thursday. That means it's time for me to give my voice a rest and let Uncle Mike exercise his. It's time for the Strategy Block. And, with all these things popping off in the news cycle these days, you got, unfortunately, more terror attacks. You got some saber rattling out in North Korea. You got healthcare. You got Trump. You got Russia. You got oil. It seems a very news and perhaps event-driven cycle these days. Of course, whatever Trump is tweeting at that particular moment also tends to move markets. So a lot of news and event-driven cycle we're in. And in that case, Uncle Mike, I think it might be a good time to explore the impact of that on your trading. And perhaps, just perhaps, if I could be so bold as to suggest, also how you should perhaps shape your risk and reward around such event risk. Do you think you have that in you today?
I do, and you can be so bold, Mark. I have no umbrage with you. Now, Giovinazzi, on the other hand, I'm so mad at him right now.
Well, we'll talk about him after the show. Me and you, we got a lot to talk about with him.
I think I'm going to go out there and I'm going to put a piece of Scotch tape at the bottom of his mouse and see how tough he is then. He won't be able to click on anything. Try doing stuff then when your mouse isn't active. But anyway.
We're bringing the bear out. He must be getting better.
Oh,
that's
for
the
sure.
Tosaw we know.
For sure. But anyway, I want to talk about a trade that I was in and I got out of today. Earlier this week on the dip, I sold a put spread. Sold at 233 was the short strike. I believe 223 was the long strike on SPY. And just a very basic sale. The concept was that the market dipped, higher volatility, wanted to buy the dip, wanted to have the flexibility to roll down, do a few things, and do some stuff in case it went against me. But it went my way, and I sold it for 75 cents, I believe. And so the market went up. It went up today, and the SPY was at around the 235 level, closed at roughly 234, but when it was around the 235 level, that's when I had to make a decision. And normally my price target would have been to get it out maybe at 15, 20 cents, something along those lines. But I was able to get out at 25 cents. Actually, I think I ended up getting out 26 cents. And normally in trading, you want to be careful about getting out early and things like that. If you have a specific goal, there's one pretty much anyone would say that you want to stay towards what your original plan is. I want to stick to my profit target, and I want to make sure that I can get what I was trying to get, because if you start taking profits too early, then it doesn't add up in your overall trading system. Of course, there's the old saying, you never go broke taking a profit. That's true, but if you all of a sudden stay in trades thinking, wow, I'm up a penny, and then all of a sudden let's get out, and you get out all the time, but then all of a sudden you're letting yourself take losses of $2 all the time. Well, it just throughout time, that's not going to add up. But there are times when I believe it makes sense to get out early, and today was one of those times, or there's a lot of debate over what's going to happen with the healthcare bill. Are we going to have a pullback if the markets come down? If we do have a pullback, will it be a buying opportunity, or will it just be another stop in the way to Bearsville? Who knows? Who cares, quite frankly? The decision that I made today, and I would encourage a lot of people to make, especially if you're in a premium selling type of trade, is what is your new risk reward? And my new risk reward would have been to make maybe another 10, 12 cents, but my risk was over $10. Now, I know I probably would have I had the contingent order in place, but I know I would have gotten out before I would have gotten to that level, unless we had an overnight gap down, of course, for which I am prepared with the size of the position. But when looking at it, the decision that I made today was, is it really worth staying in this trade of this size for that much more reward? Or would it make sense to just get out early right now? And that way, right now, sticks and stones can break my bones, but the healthcare bill cannot hurt me. I'm in cash. Now, let's say the healthcare bill would help me and the market goes way up and I just totally miss out on it. Well, I was going to miss out on it anyway because I was just selling premium. I had a limited reward trade on anyway. So I kind of already made that decision. But let's say it were to go against me. Well, if it were to go against me, then I'd have a lot to lose with not that much to gain. So what I want to emphasize today is that whether you're a technical trader, a news trader, a fundamental trader, whatever the case may be, there are times that you need to reassess the trade when the trade is actually in place. And today was one of those examples. Now, just to give you an idea of it, we were able to get out towards the highs today. Later in the day, I was thinking about it. I'm glad I didn't do it, but I was thinking about taking on the same trade again and then getting back into the exact same trade for 60 cents as if nothing happened. Didn't do it, but I think that when doing small little prudent things like this, things like that are what I believe have really kept me around in doing this for 15 years. And I'd encourage you guys to do the same. Now, once again, make sure that there's a reason for it. If you're just doing it because you're so excited, hey, I got a gain, I'm up a penny, let's get out quick. Well, it's not going to add up. But if you're in a situation like what I was in today, and it makes logical sense to get out a little bit earlier than you initially thought you should, those are things that you can do to lengthen your trading career, so they say. And that is one to grow on for today.
Thank you for that, Uncle Mike. And we got a little bit of time, so even though it's Thursday, we'll give you guys some time on the show as well with a little bit of some mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Let's kick things off here. We had a lot of interesting questions. Let's pay off the one we started on the show earlier this week, where we got obsessed with zombie apocalypses. We asked you guys right after the show if you since SKEW was looking so high, we should really all prepare for what Zero Hedge has been talking about forever. Of course, zombie apocalypse. And so we said, what's your zombie weapon of choice? And we gave them the choices of a sword/axe, club/hammer, flamethrower, just all by itself, because flamethrower is kind of a category by itself, or rifle/shotgun. A few of you wrote in with many, many interesting questions, like, do we have unlimited ammo? I said no, so bear that in mind. But what do you guys think won? Mr. Rock Lobster, what won our zombie weapon apocalypse poll before we get to the real stuff?
The zombie weapon apocalypse poll. Sometimes where do you get this stuff is my question. That's my biggest one.
Live on the show last Monday. That's what we were talking about.
Oh, I forgot about these things. I thought I said a flamethrower.
That's your choice, huh? Flamethrower? Okay, Uncle Mike, where do you fall on this hotly contentious issue?
Well, I mean, this has been first off, I want to compliment you from the fact that with all these things going out about how you shouldn't ever talk about guns ever or anything like that, you're going right to it. You're like the Mr. Salty Pretzels of how everything's supposed to be low salt, no salt. Mr. Salty doesn't care, and you're like the Mr. Salty of this realm, so I applaud you for that. But the weapon of choice I've protected my family with for all of our life as a family has been a Remington 870 12 gauge, so I'm going to go with the shotgun.
Kind of hard to argue against the shotgun, but of course, this is a scenario of finite ammo, so things are challenging. I think I joked last time I would like to have a shotgun with like an axe taped to it. Then you kind of got both ground covered. I probably have to go in the axe sword though, if with limited ammo. But our listeners weren't dissuaded by the limited ammo. They went nearly 50%, 48% for rifle shotgun. Interesting. Then a tie for sword axe and the Rock Lobster's beloved flamethrower, and the 10% only for club hammer. No love for the blunt instruments here in our audience. But let's get to actually some of the serious stuff. We were, you guys have been popping off, and our battle, our broker madness battle, has been popping off all week, and it's been interesting to see the results so far. And let's just right now the current battles that are raging. We actually got a bit of a slugfest going with last year's champion Trade King versus upstart Lightspeed Trading, Lightspeed Financial. They're slugging it out. Quite a few votes lining up on that one already. Two very motivated communities there. And then we also have Trading Block versus Interactive Brokers. So this is our round 2 battles right now. These firms have all progressed. We've had some interesting defeats so far. If I can get the actual image up for me, I can tell you exactly how it's progressed so far. But so far, that's what we've got playing right now here into round 2. Who are you buying or who are you selling in those battles right now? Let's see. We got Lightspeed versus Trade King. Lightspeed also has that live Vale X, even though they had some headlines today about SIBO finally selling that, this time to Sterling Trader, I believe. And then Trade King versus Interactive Broker. Amongst that whole crowd, who are you picking, Mr. Rocklops? I'll let you just pick one. Make it easy for you.
I'm going to go the Lightspeed group because we like them.
I had a feeling you would pick those guys. Mr. Uncle Mike, how you feeling? Who are you going for here?
Now, did you say Trade King versus Interactive Brokers, or was it
Trade King versus Lightspeed Financial and Trading Block versus Interactive
Trading
Broker?
Block? Got it. Let's see. I like Vlad and the boys over there, so I'm going to go with Trading Block.
Yeah, they're a newcomer to our battle this year, and so far they're acquitting themselves quite well. I'll give you I just got the standings right now. So our first round, our Sweet 16, because we can only get 16 brokers. Once you get beyond that, you're kind of really dipping into the dregs of society there. So we cut it at 16. We can't do a full 64, unfortunately, listeners. So the Sweet 16, our first round was Options House versus Vanguard, another newcomer this year. Options House smoked them. Then we had Trade Station versus Scott Trade. And that battle went down. Trade Station beat Scott Trade. So they moved down to round 2. And it was Options House versus Trade Station. And that's what's faced off. I believe that one's done. I do believe Option House won. I'll have to check, make sure. And then we had Trading Block versus TD Ameritrade. So a bit of an upstart there, a bit of a Wisconsin, I believe Villanova type game there in our first round with Trading Block unseating TD Ameritrade / Toss. I thought there'd be a shoe-in for at least the Final Four, but nope. Trading Block taking him out early, and then OX versus Interactive Brokers, and IB took it. That was a slugfest. That one went down to, I believe, a couple of votes and maybe a few write-ins and a few others at the end of the day. Remember, you can vote primarily by our poll, but you can also vote on other platforms if for some reason you're not on Twitter, so your Facebooks, your stock twits, and what have you. But the primary methodology is still the poll, and you can always email. Of course, if you want to win fabulous prizes, you got to retweet and like. Do something that we can track, because we can't track when you vote, unfortunately. We can just see the results. And then we also had Trade King versus Fidelity in round 1. Trade King smoked them. Moving on to round 2, where they are now facing off against the winner of Lightspeed and Tradier. Speaking of smoking, another new entrant this year was Tradier, and they got no love. They got smoked by Lightspeed. So now Lightspeed facing off against Trade King in round 2. And then we also have we had E-Trade versus Merrill Edge in round 1. E-Trade's winning that one, coming out on top. And we had Schwab versus Sogo Trade in round 1. And Schwab emerging victorious there to take on E-Trade versus Schwab. I believe we have those results. I'll have to make sure if they're not finalized. I do believe E-Trade took that one. So interesting. We're in round 2. Some good battles facing off right now. If you haven't played, if you haven't voted, head on over at Options. It's the easiest way to do it on Twitter. If you don't want to do it for some reason, head on over to Stock Twits. You can respond there. Head on over to Facebook. You can respond. You can even send us an email. We will count your votes there as well. It's just a little bit lagging when you do it that way. It's much more immediate and direct on the Twitter platform. And of course, if you want to win fabulous prizes, we're giving away a bunch of stuff. We're giving away some cool exclusive Options Insider gear. You literally can't get that any other way unless you work for us. So so that's the only way to get that. It's pretty cool stuff. They featured it in the Land's End catalog. They like it so much. Our logo is pretty cool. So it's cool, high-end Land's End Options Insider gear, only available through contests like this, as well as some other cool stuff. I think there's an Amazon Echo in there, and I think a cool swag box. We get a lot of cool stuff when we go to these events all the time, different items from throughout the world of options that you guys probably wouldn't see. Maybe even some cool retro stuff from places and firms and events and exchanges that maybe don't exist anymore. So maybe they're collector's items. In fact, we tweeted out something this morning. My coffee cup was from the old Board of Trade IPO, BOT, B-O-T. That was their symbol, if you recall that. So a lot of cool stuff like that lying around here. We won't give you a used coffee cup, unfortunately, or maybe fortunately, but you'll get some cool stuff from our storage as well. So you get a swag box, or you can win some cool gear, or you can win even an Amazon Echo Dot. So get in there, retweet, like, get all that stuff out there. But the battles are raging. They'll rage throughout the length of the tournament. But we're getting down to the nitty-gritty now. We're getting down to the hardcore with a few upstarts. We got Trading Block, and we got Lightspeed surprising people, and also Options House fighting their way up. So we'll see how well they run. Meanwhile, keep it on running on. We got to keep on running with the show right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
A lot of umbrage going on behind the scenes here, listeners. Too bad you can't see this. It's all in our behind the scenes chat. But these two just won't stop sniping at each other. I feel like I'm more like the UN standing between the two, taking umbrage shots at each other. We started off the show also talking about our old friend there, GameStop. They're pricing in about $1.80 or so, about 7.5%, selling off over 10% now in the after hours. So they're off about $2.40 or so. So yeah, not looking good here for GameStop. That downside move has accelerated again. Perhaps not feeling the love or feeling the heat from the digital distribution. You go into a GameStop now, and you know my little guy loves those places. You can go in and get more tchotchkes than you can game these days. So maybe that's how they're reinventing themselves as a tchotchke seller. We shall see. Meanwhile, though, there are a few other things popping off for the rest of this week. Mr. Rock Lobster, we'll start with you. I'll get you off your umbrage battle with Uncle Mike here. What's catching your eye for the rest of this week into the weekend?
I laugh. We are unifying against you, Mr. Longo. You wait till the next show. Anyway, what's catching our eye? This stupid healthcare thing. Let's get something going so the market moves somewhere, and maybe I can unwind some more stuff. But I think we're stuck until, like Mike said, we've come a long way. Any news now will move the market because everything is kind of very high and fluttery. So it's going to stay like that until there is some kind of news, I would predict. The only other thing I'm watching too is Google, kind of off substantially from just trading all-time highs only a week ago maybe. And I guess major advertisers are pulling out of YouTube. I don't know, because I guess the terrorists are using YouTube or something like that. So, but a surprise. So I kind of think Google's a bit of a buying opportunity, but I don't see everybody leaving YouTube. And I'm going to guess the smart guys at Google are going to figure out a way to have an algorithm to start shaving some of that bad stuff out of YouTube. But that is just a guess, because those guys are not dumb and they don't want those advertisers to go away. So that'd be my closet pick, is a little bounce in Google. Full disclosure, I own that stuff.
How long have people been saying that about Google? They're going to find some way to clamp down on all the, shall we say, nonsense floating around out there on YouTube. It's been about a decade or more. I don't think they found a way yet. So surprise, surprise, algorithmic ad buying across an entirely user-controlled ecosystem of content equals, sometimes your ad's going to pop up on something pretty horrible. You think people would know that going into buying ads on a place like Google. I guess maybe they're all collectively waking up to that fact. I kind of agree with you. I think there's a tempest in a teapot. If they really want that audience, that's one of the few places to go get it. So they're going to go after it there. But yeah, big brands that are a little more image conscious can afford to be picky and choosy with where they go with that stuff. Maybe looking elsewhere for a while, which is always spooky to an ad dominated and driven company like Google, now Alphabet. Uncle Mike, same question for you, sir. What are you watching other than being glued to the GameStop earnings call?
Aside from that, I think the big news right now is the healthcare bill. But aside from that, the other wild card factor that could exist right now is with this Russia investigation that's going on. Now, I don't think there's going to be any smoking gun or anything like that, but this does have potential to do something market worthy if some type of news comes out to where, did he know about it, did he not know about it, or something along those lines. So aside from the healthcare bill, I think that's the other thing that's going to be dominating the news. Also watching March Madness to see who's going to be the big champ this year. And Andrew and I are going to have our meeting to become unified one more time. We realized that, Andrew, I'm sorry, I would never put Scotch tape on your mouse. I'm sorry, I lost it. I would not do such a mean thing. So Andrew and I are unified again. And that's where we are.
I don't know.
Against the Overlord.
I don't like all this unification here on my show, so what I'm going to do is I'm just going to hit this little button over here. There we go. And that means we've come to the end of yet a very unified, first very fractious, now getting disturbingly unified show here on the old option block. You can't argue with the music. It is inarguable. We must conclude. All right, it's been an interesting journey. We started off talking all things market and VIX, and perhaps not so much, as well as didn't touch on SKEW. We'll get to that maybe tomorrow on vol views and perhaps even on TWIFO. And of course, a lot of other fun stuff popping off, including GameStop, and we got into all sorts of fun, unusual activity in Fireeye and Vale, and even GGP, our friends there across the river. And of course, your zombie apocalypse weapon of choice, as well as all the craziness going on in our broker madness. We do this once a year. It's really fun. If you haven't checked it out, check it out. At Options is the place you can find it on Twitter. And you too can play along. You like a broker? Vote for him. You hate a broker? Vote against him. It's easy and you can win prizes. Have fun. Let your broker know what you feel about them. If you don't like them, vote early, vote often, get them out of there. It's easy to do. At Options on Twitter to make your voice heard. All right, let's start with you, Uncle Mike. Get away from all this unification nonsense. What can people do with you over there at RCM Wealth Advisors, sir?
They can unify with a wonderful advisor who likes to work with people who can really be in their corner, and I'll be happy to roll your puts for you if that is what your need entails. If you're interested in working with someone who's not afraid of the word volatility or put option, feel free to give me a call at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
Trust me, listeners, his business card does say, I'll roll your puts for you. It's kind of like his thing. So he does owe me for that marketing invoice for that suggestion, by the way. But we'll deal with that after the show. And speaking of people owing me, he owes me for his Options Bootcamp name, which is the Rock Lobster. What's cooking in the land of all things Option Pit, a.k.a. IP infringement?
I know, but I end up doing shows for you, so it's all even in the end. Oh, Andrew, I need you to do a show. So what do we have? We will have a new masterclass. Everybody liked the last one. That one will be available for sale. It will teach you how to trade the vol products, learn how they work, and we'll be doing one on selling premium coming up after Easter. Look for that from Option Pit. If you want to learn some options on your very own, come and visit us at optionpit.com. We would be happy to teach you how they work.
There you go. Head on over to optionpit.com. You too can be an Options #master. Take their masterclass one of these days. And whenever they do it again, I just like saying masterclass. It sounds good. Optionpit.com to learn more. On behalf of the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, of course, joining us live, and all the other ways you get the show after the fact, your iTunes, your TuneIns, your iHeartRadios, all that fun stuff. Don't forget, if you haven't done so, only once a year do we do this big March broker madness palooza. Vent yourself on your broker. If you don't like them, let them know in that poll and have all your friends vote against them. If you do like them, get in there, show them some love, and then let them know that you do it. Retweet it, hashtag it. Maybe you'll get, who knows, maybe you'll get some acknowledgement from. A lot of big brokers have already been coming in and retweeting and trying to fight for themselves and arguing and trying to get their clients motivated. So it's kind of fun to see how all that plays out. And you too can join the party over there on Twitter at Options to make yourself heard. And we'll see you, of course, this Thursday, so we'll see you on Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.